All right. Good morning, everybody. Good morning. Good morning. How you guys doing today? Luciano, Alex, nice to see you. Who else do we have today? Gary. Gary, thank you for the news heads up. Good morning, Marshall. I think if you start chasing all the news, man, you're going to have news all day long because of different time frames. Like, if I apply that filter, oh my goodness, look at all the things that I'll be chasing today. That's a lot. That is definitely a lot. Let the fun begin. That's what I'm talking about, Alex. So, guys, every morning, first and foremost, and good morning, everybody. It's nice to see you. I love that we're having the news conversation first um, because knowing where news is happening. If you go to forexfactor.com, that's where I go typically. And Gary made a great observation. There's news all over the world, guys, right? There's news that may impact all over the world. Europe, and I don't even know what CHF is. Europe, maybe that's China financials, possibly. Canadian. There's a lot of markets out there, guys, and there's a lot of impactful news releases. I'm concerned about America, you know? Gary, that's awesome. Good morning, Zeba. So, guys, I'm watching the American markets because we are trading Chicago Mercantile, right? New York Stock Exchange. We're trading American investors, and those are the people that we're worried about the reactions from. Not even worried. I hate to use that word. So every morning, today is Thursday, May 4th at 8:30 a.m. We had the unemployment claims. And then, guys, there's not a whole lot going on anymore. If you were watching the S&P at 8:30, you watched it spike. If you were watching the NASDAQ, you watched it spike and jump and do those things. Um, and then it settles down and we resume. Nothing else really going on in the American market news until about 10:30 a.m. If you're a natural gas storage kind of trader, well, then you'll probably want to be aware. Other than that, not much else going on until tomorrow, Friday. Crude went down 63.75 yesterday evening. Holy smokes. That's a big jump. I'm going to go fill up my car this morning. And we'll see. We'll see what happens throughout today, right? Guys, that volatility is good for us. When that market moves, that's good for us because we're recognizing advantages in a moving market. The only time trend traders don't have a good time trading the market is when the market isn't trending. So, first things first, always checking news, making sure that we're not jumping into a freight train of emotion. And then I'm going to coin that phrase. And then if you're one of my NinjaTrader 8 users, every morning what I do is I go through these stability instructions. I go through and I delete my cache and my tick. I get rid of my temporary folders. I get rid of my recovery folder. I make sure that my computer is running optimally, that I'm on that gaming program, that I'm watching my power plan, all those good things to help make NinjaTrader 8 run smoother. It's a power hog, without a doubt. It's a great looking platform. I love it. The software is the exact same code, whether it's NinjaTrader or 8. It's just a different platform. So if you choose to use NinjaTrader 8, make sure your computer is running optimally. If you have a little bit of an older computer, maybe you've still got that Barney Rubble 2000 model. Easy Computers has put together a couple options for next-gen users designed specifically to run that NinjaTrader 8 efficiently. They have a laptop and they have a desktop version, depending on what you like. If you need that link, if you're curious, let me know. We'll get those in the room for you. And then everything that I talk about each and every day, guys, we're going to come from the education page. There are no secrets with Nexgen. I think that's pretty cool. I don't know, maybe you guys do too. That I'm not going to give you a little bit and hope that you figure out the rest, or I'm not going to give you a little bit and try to sell you the rest. What I'm going to do, and we're going to do this today, this is our first hour every day, is we're going to talk about a plan that creates consistency. Um, we're going to talk about a plan that recognizes advantages, guys. And I'm going to encourage all of you, brand new users, let's focus on entries for 20 days. Because once you start to really get these entries, trades become very manageable. And that's the second half of what we do. We go from entries to management. If you are a little more advanced, if you're comfortable with your entries, guys, I'm going to encourage you. Keep sharing your charts. Let's talk about your management as you develop a management plan. Let's talk about your chart reading. Don't stop moving forward just because you understand one trade. Keep watching those patterns. Keep recognizing those nuances, guys. You're going to grow for the rest of your life. And that's the goal, right? Never stop learning. Always be a student. All those other cliches. And we start being a student here on the education page. And I'm going to go to the glossary of common terms. And I'm going to remind you guys that for our first 20 days, for the first hour of class, we're going to talk about this high probability trend trade. Every indicator on every chart is going to agree for this trade. It's the highest probability. 3 simple rules, 2 charts. Guys, this is going to be your focus. And your high probability trade is going to take you to a medium probability trade. We're going to still be willing to trade when an issue exists. You're just going to manage it a little more assertively, right? You're going to have to maybe take profits at a trouble spot, get to a 0 loss level. And that's okay. That's a part of what we do. But focusing on that high probability trend trade is going to make you a chart reader, guys. And people come to me privately all the time. They're like, oh my gosh, I'm reading my charts. I'm looking at my charts and I'm starting to anticipate things based on patterns. And that's the goal. To be able to look at your chart, to understand where the market is likely to continue, use that point for entries. Where the market is likely to go is going to help you create this management plan, right? And then where the market is likely to stop, especially for new users, for my trend traders, areas where the market is likely to stop is what we call a termination condition. And not only will it keep you out of a trend trade into areas where that trend isn't likely to continue, but that where the market is likely to stop point, that termination condition becomes the anchor for the highest probability trend trade that we teach, that 5-1 trend trade that comes after a termination condition on the 13-2. So the goal is that you can read charts. And if you keep it simple, if you allow yourself to be a student, guys, this process is going to take you 15 to 20 days. If you're doing the study, if you're following the path, if you're embracing the plan. And the plan is very clearly defined. And it begins with posting your trades in class. And I can't stress this enough, guys. I'm available 15 hours every week live to give you feedback on what you're doing right, what you're doing wrong, what you could do better, reads that were amazing and reads that maybe needed a little bit of help. 15 hours every week. All you have to do is post a picture in the room, except for the Spock picture. There's just, there's nothing I can do with this one. But Gary, that cracks me up because that gets Star Wars people's up in arms. It's May the 4th, guys. Have you heard that? May the 4th be with you. Go get a tattoo today. Post your trades in class. And then track your performance in a spreadsheet, guys. Keep a diary of everything that you do. Every time you take a trade, there's a lesson. There's a lesson on entry. There's a lesson on trigger reading. There's a lesson on management. So get in the habit. Every time you take a trade, take advantage of the spreadsheet, guys. Go through filling it out, each and every trade. Do it on simulator. You're going to begin to recognize patterns as you learn them. You're going to recognize patterns in yourself. We all have a tendency to break a rule in the beginning. Some people fight momentum. Some people fight termination conditions. By using this spreadsheet, you're going to begin to recognize those patterns. I'm going to begin to recognize those patterns. And we're going to work together. Is the checklist posted on the website? The spreadsheet? Absolutely, Gary. I feel like you led the witness on that one, right? Like Gary's helping the rest of you guys. I like it. So you can, oh, and it comes up as a zip file. So you're going to click on it. It's going to download a zip file, guys, and then you're going to have to take it and extract it. So you're going to click extract all. Whoops, everything's coming up on the other screen. And pick your file. Where do you want it to go? Well, I want mine to go to my 101 folder, to my pictures folder, to my study folder, something. And then I'm just going to hit select folder and extract. And then when I do, it's going to show up over there. And if you need any help with that, let me know. But guys, this spreadsheet, everything you do, track it. What type of trade was it? When did you take it? How did you feel? Was it strong top and bottom? Were your triggers right? Was your entry right? What were your targets? Were they hit? What happened? And then any notes about how you feel that trade went, maybe some feedback that you get from class. And then when you're developing that entries, that recognition of entries, guys, I've provided you already about 160 pictures of perfect entries, of rules-based entries, of checklist met entries. All you have to do is begin to study these, right? Go through, look at what they look like, find them yourself, create this database of knowledge of those great entries. And like I said, every great entry creates a management opportunity. So you'll begin to develop a management plan based on those great entries. You'll begin to recognize patterns in the market that you may put on chart reading things. And guys, this is the Mark Novak section, the termination looks, because I was notorious for trading in determination conditions, and I didn't realize that I was doing it until I posted in class. And John Novak, when he taught the class, he's like, Mark, why do you keep trading into brick walls expecting them to break? I think those were his exact words. And it turns out that it was because I was hoping that I would win rather than taking rules-based trades. So guys, take advantage of having this spreadsheet available to you, and embrace the process. Post lots, guys. Post more than you think you should. Ask more questions than you're comfortable asking. And then every time you take a trade, every time the rules are met, post it in the spreadsheet. And what we're going to do today is we're going to learn the trigger line and Fibonacci rules for when it's okay to trade, guys. This is the first hour of every classroom. Your job is to simulate. Simulate your trades. Practice your rules. Post them in the room. Make sure that you have the correct rules, because guys, when you have the correct rules, you're trading that trade that typically wins more than it loses, right? You're creating a statistical advantage. Don't practice the wrong trades. Simplify. I see new users trying to do everything. I want to do what Gary does. I want to do what Ziba does. I want to do what Mark does. Man, I want to trade like John trades. Don't do that. Simplify. Make it yours. Own it. You have to learn these looks until they're easy, until they're second nature, until you no longer question yourself going into a trade. You can look at your charts and almost instantly know whether or not your rules are met, guys. That's your goal. You can use market replay to go back, replay the data for the day that you just finished trading, retrade the day, fix your mistakes. If you miss an entry, take that entry. If you get out too soon, hold that trade. If you get out too late, exit that trade. And the idea isn't that you're going to go through and become the simulator millionaire. The idea is for you to see the potential of the software when it's executed correctly. Market replay lets you pause before you enter a trade to go through your checklist to make sure that the rules are met. Take pictures. Take so many pictures, guys. Your goal should be 15 pictures a day minimum. That's 75 pictures a week. That's 300 pictures a month. By the end of 90 days of study, guys, you should have close to 1,000 pictures in your spreadsheet. And if you don't, well, then you're shortchanging yourself, guys. Repeat this process every day until you always take the correct trades. Not until you win every trade, because something that wins 70%, mathematically obligated to lose 30%. But when you're always taking the correct trades, and the correct trades have been proven to win more than they lose, aren't you guaranteeing yourself that you can win? And then when you guarantee yourself you can win, guys, go to one of those prop firms. Trade their money. Test your plan. Make sure you're good. But guys, this is your path. And I like to share this path because I fought this path tooth and nail in the beginning. I chose not to take pictures. I chose not to write down my rules, and I chose not to participate in class. It cost me about $5,000 over the course of 2 days when I thought I was ready to go live. So my hope for this classroom for my new users is that you embrace the path a little bit, really get that study in, put your nose to the grindstone for 30 days, and create a plan that's been proven to win more than it loses. Embrace a plan that teaches you to read your charts, and keep it simple while you learn to read your indicators. So with all of that said, let's talk about a high probability trend trade. Let's focus on rules. Let's make sure that we can recognize the patterns. When we talk about a high probability trend trade, guys, we're talking about 3 simple rules. Each one of these rules is going to provide an advantage. Hey, Mark W., welcome to the room. Perfect test. I see you loud and clear. Each rule provides an advantage, guys, and there's 2 ways to look at this. You can accept the advantage and put yourself in a better position for success, or you can choose to revoke the advantage by breaking your rules. You can say, well, I don't feel like I need the advantage of momentum, and then your win percentage typically goes down. I don't need a clear path. So make the choice each and every day. Are you going to embrace the advantages, or are you going to forfeit that advantage? Because a trade is nothing more than momentum, a clear path, and an entry area. That's it. 3 rules, and 3 rules that come about on 2 charts, guys. We are going to use a broad spectrum, a big broad stroke of a brush, and you're going to use a single bar on the 13.2, the most current bar printing. You're going to be able to determine the trend of the market. If it's green, the background is green, you're in an uptrend. If the background is red, you're in a downtrend. As a brand new user, as a high probability trend trader, your job is to trade in the direction of the trend. Don't fight that trend. It rarely works out for you. Rule number 1 says that you have to have strong triggers, and that happens on the 13.2. And that rule number 1, strong triggers, is the first part of the equation, providing you the advantage of momentum as you look for that high probability trend trade. Rule number 2 says no termination conditions should be present. No areas where the market is likely to stop. And rule number 2 provides the advantage of a clear path. Nothing in the way between your entry and your target. And then finally, when those rules are met, you're going to turn your attention to a smaller, faster chart. And guys, this is your entry chart. Notice that entry is in bold. You're using your 5-1 to determine where the market is likely to continue. And you're going to be able to do so with such accuracy that you're going to use a limit order to buy or sell a pullback in an area inside of favorable large triggers. And this allows you to reduce your risk, but it also allows you to maximize your profit potential. So when we talk about that refinement process, if we put it on 2 charts, this black box is circling 1 bar on your 13.2. It's 1 simple bar, and it's about 15 to 30 bars inside of that 1 bar when you go to your refinement chart, your entry chart. So what we're going to be able to do is take the information from the 13.2 and whittle it down to a pullback right to an area inside of trigger lines, and this becomes the area where the market is likely to continue. So this is our focus, right? 2 charts, keeping it simple. Guys, you're probably going to add more charts to what you do over time, but get good at using 2 before you try to add more, and then embrace the idea that a trade is nothing more than 3 advantages: strong triggers providing the advantage of momentum, no termination conditions providing the advantage of a clear path, and then being able to refine that broad stroke of a brush and entering the market in an area inside of triggers on the smaller, faster chart, providing you the advantage of an entry area where that market is likely to continue. And guys, that's what we're going to talk about for the first 30 or 40 minutes right now. And we're going to start simply with trigger lines. Trigger lines are a momentum indicator, but they're also going to help you develop. Guys, can anyone else hear me? Give me a Y if you can hear me. Please and thank you. David says he lost sound. Yes. Okay. Thanks, guys. That's going to happen sometimes, every now and then, 5x5. You know, I said that to my Navy buddy, Gary. He was pretty impressed. He's like, heck yeah, Mark. You're not as dumb as you look. Because that's what Navy guys say. You guys are a mean bunch. Guys, we're going to use the trigger lines to give us an awful lot of information. The first thing we're going to do is we're going to let these determine the trend of the market. When those small trigger lines break above the large trigger lines, guys, it's going to, yeah, it was, Gary. Small trigger lines, your faster moving trigger line, solid, breaks above the large trigger line. This is what paints that background green, guys. This is what gives you that uptrend. Opposite side is true. Small trigger lines break below the large trigger line. That background paints red, guys. If nothing else, this gets your brain set on the proper direction. Which direction should I be trading? In a green background on my 13.2, I should be looking for rules to be met for high probability trend trades long. The red lets me know that I should be looking for those rules to be met for high probability trend trade short. This really is your first advantage that you give yourself, trading with the trend. But your first rule says that you must have strong trigger lines. Well, the trigger lines work together, guys, both small and large, solid and dashed. When the small triggers are crossed up, they're above the large triggers, which are also crossed up. Both triggers are wide. It's the space created between the two. Think of scissors opening, prepared to cut, right? Ready to get business done. It's the space between the two that lets me know that the odds are favorable for this market to continue up. So in the room, odds favorable momentum is a key phrase that you're going to hear. The simple process of allowing every trade you take to begin with this odds favorable momentum is going to increase your chance for success. Because with that strong trigger line, this is your best look for that pullback, for that refinement chart. And these tails on a 13.2, you'll see these after the fact, and I'm going to teach you how to recognize them in the moment. But these tails are pullbacks, potential entries for a high probability trend trade, and they happen with that odds favorable momentum. In a downtrend, you'll see the same thing. Small's below the large are wide. They're angled in the direction of the trend. That space created between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. Committing to that strong trigger line, embracing the advantage of momentum, because when those small triggers work their way back inside of the large, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. You go from that warm, fuzzy feeling of odds favorable momentum to that, oh no, anything can happen up or down. So you're going to see these opportunities, these potential pullbacks, when trigger lines are their absolute strongest. And this is a 13.2 with no noise, no other indicators, just recognizing from the beginning to the end of the move when that odds favorable momentum is present until it's not, and looking for your opportunities within that range. And then kind of giving you that other look, that weak triggers, that anything can happen up or down. Odds favorable, there's those tails, there's those potential entries. Anything can happen. You're going to sit on your hands for a minute. A lot of times you'll see the market turn when you begin to lose that strength in the triggers, ultimately providing odds favorable once again. And there's those tails one more time, guys. You're going to learn how to study these tails. And if you spread it out throughout the course of a day, what you're going to find is that you're going to have a pretty good mix of odds favorable and anything can happen. You're going to learn a little bit of patience. The hardest thing for a new trader to do is to do nothing when there's nothing to do, guys. So embrace the advantage of momentum. When your trigger lines don't agree, don't try to predict what the market will do, right? Sit on your hands, go get a sandwich. because ultimately that odds favorable momentum is going to come back again. Is everybody comfortable? Odds favorable momentum, that first advantage, the advantage of momentum. You give me a Y in the room if you're with me, guys. Mark W., I know you're brand new. Marshall, is everybody cool with this? Let's embrace momentum. Giving you the best chance of success, guys. And then once that momentum is in place, thanks, Marshall. Rule number 2 says don't trade into termination conditions, right? Don't trade into an area likely to stop the market. Because when the termination condition is false, when rule number 2 is met, we have the advantage of a clear path. In the areas that may stop the market, this is great for you new users. I put this picture together. This is like a little map for you of what you're looking at. Areas that may stop the market. Divergence highs, that magenta line towards the top of your screen, guys. These magenta lines print when a pivot forms, meaning the market goes up and then back down. And there's a loss of momentum, guys. That loss of momentum is calculated behind the scenes. You don't have to do any math. But when this magenta line prints, you know that momentum is waning. And when price returns to it, we're aware of those areas. Same thing from the low. Divergence low, if a pivot is formed and the momentum isn't following price, you're going to see this magenta line, guys. It's very clear on the charts, and it gives you an opportunity to recognize key points in the market. You're also going to use red Fibonacci resistance. These are going to print on your charts automatically. You don't have to do anything to get them there. Blue Fibonacci support. These yellow 1-to-1s, which are kind of like Fibonacci lines right in the moment, guys. It takes the current market action and it creates these potential bounce points live in the moment. We're going to use those. And then there will be times when we use the mid bands. Your mid band is a moving average that runs through the center of your chart. When price is below, your mid band will be magenta. When price is above, your mid band will be green, guys. So these are the areas that may reverse the market. And it's a pretty simple 2-step process to determine whether or not a termination condition is true. And guys, this is the first one, right? I'm going to type this right in the room for you. Price reaches an area. Not trigger lines reach an area, but these actual price bars come down and reach an area. When price reaches an area, all you have to do is ask yourself, where are the triggers? That's a triple G triggers there, guys. I just typed in the room. Price reaches the area, check your trigger lines. If they're not below support, don't take shorts into that area. This is an area that may reverse the market. It may stop the market cold in its tracks. It may create a bounce that'll ruin your day. Price trades reaches resistance. All the trigger lines remain below. No more long trades. Price pulls back to support. All the trigger lines are above. No short trades. Guys, remember that 90% of what you're doing during the day is simply reading your indicators, being a chart reader, waiting for these advantages to be present. You're going to hear the phrase strong top, strong bottom in this classroom a lot. A strong top is what sets the tone for that highest probability trend trade. Remember, that trend trade that happens after a termination condition on the 13-2. So a strong top means that your termination condition, no triggers through an area, Fibonacci divergence high. Your termination condition has created a full reversal, meaning that your large triggers go from green to red from a high, and that full reversal is giving you odds favorable momentum in the direction of the trend. And it's always going to be in the direction of the trend because the small have to be below the large in this instance. So a termination condition that gives you a full reversal is what we call a strong top. And on that same note, a termination condition, price reaches these 1-to-1s, absolutely no trigger lines break through the area. This termination condition keeps us from attempting shorts. And when it creates a full reversal, when those large triggers go from red to green, when that full reversal provides odds favorable momentum, guys, there's another one of those tails, one of those pullbacks. This is your highest probability trend trade. When it comes from a reversal on the 13.2. So in its most simple form, guys, is everybody comfortable with what we're talking about here? Price first reaches the area. If the trigger lines don't break through the area, small and large, the area is not broken. We do not have a clear path. That's it. We forfeit the advantage of a clear path. When is the path considered clear? When both the small and the large get to the other side of Fibonacci resistance, now we have a clear path because the area is considered broken. Resistance begins to act as support. And guys, there's another one of those tails. Looking at the possible entry on the 5-1. So no triggers, no path. Both triggers, clear path. That's it. It's a two-part process. The middle picture is going to be the second trade most of you look for. And this is your first medium probability trade. And medium probability trades mean that an issue exists. When the small triggers break through an area, the large triggers do not. And the key to this look, guys, say it with me, is odds favorable momentum. The smalls break through with odds favorable momentum. Strong triggers break areas. This 6980 area, this resistance, has the potential to break. It hasn't broken yet, but because of the odds favorable momentum, the potential is there for this area to break. It's not considered a clear path, and this issue is going to have you looking for the perfect entry on the 5-1 before you take the trade. So do me a favor, guys. Give me a Y in the room. Let me know that I'm cool to go on to entries, or ask me a question about termination conditions. Guys, price reaches the area. If the trigger lines don't break through, we're not taking trades into that area because we no longer have the advantage of a clear path. When both small and large get through, it's time to look. We have that advantage of a clear path. And guys, let's go to the live market real quick and we'll take a look. And it really becomes this simple. 40.9775 is Fibonacci resistance. Price reaches the area. I'm not looking for long trades because I don't know if that area is going to hold or break. As the market moves forward, so do my trigger lines. Now my small trigger lines are above that area of resistance. It has the potential to break, but it hasn't yet broken. There's one of those tails. There's one of those medium probability. It has the potential to break with all this momentum, but I don't consider that area broken until the large triggers go through. And you see that they never did, right? This becomes a medium probability trade, but it's a trade that could have been one, that could have been taken, that had a lot of potential. It just wasn't a high probability trend trade, guys. So you'll be able to go through on a 13.2 chart. You'll be able to recognize when price reaches resistance. Hey, good morning, Billy Ray. Absolutely no triggers break through, guys. We're just sitting on our hands. We're holding on for a second. Price reaches support. Absolutely no trigger lines break through. This is an indication that we need to just be calm. Wait a second. Waiting for that clear path. Price pulls back to resistance. None of the triggers go through. It does give me a full reversal. That full reversal gives me odds favorable momentum. I see one of those tails on a potential 50-50, guys. You can scroll back and you can look at these instances over and over. And as you learn the software, the simple concept of the 13.2, when I have odds favorable momentum, just circle a tail. Odds favorable momentum, we're going to circle a tail. This is the S&P. This is live today. All you're doing right now is saying that my rules are 2/3 of the way met. I have odds favorable and my smalls have at least made it through an area. Circle a tail. And then what you're going to be able to do is, based off the advantages on the 13.2, you're going to be able to pinpoint that area where the market is likely to continue. And guys, this is the magic. right here. This rule blew my mind as I was learning it because the accuracy is uncanny. And it's so accurate, and you're going to be able to pinpoint with such just instant recognition that you're going to use a limit order, meaning you're going to wait for the market to come to you, guys. You're calling your shots here. You're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And the idea behind this refinement is just understanding who's in control using the two chart concept. The 13.2 define your areas, they define your direction, and the large chart size reflects the large crowd opinions of the market, guys. This is the group think. Over here on your smaller, faster chart is a group of yahoos that loves to fight the trend, that loves to fight momentum. And even though everything says up, they're going to do their best to push it down. And it's typically short-lived, which is one of the reasons why we don't trade against the trend. But this is going to be your look on the 5-1 when the rules are met on the 13.2. This is where you make the decision that it's time to look for an entry. Your large trigger lines, you have both large and synthetic. The synthetic look like stair steps, the large are smooth, but they work together, guys, to provide the highest advantage. And you're going to hear the phrase favorable large triggers. And favorable large triggers are when the triggers are wide, they're strong in the direction of the trend, and both the large and the synthetic should be overlapping. They should be one on top of the other because this look provides the smallest window of opportunity for entry, that smallest point where the market is likely to continue. So I'm going to share this picture with you guys. Put it in your spreadsheet. And we're going to define that window of opportunity when that pullback begins, when those yahoos try to push against the trend. So on my 5-1 chart, everything says up, right? I've got green bars, I've got strong triggers. My large and synthetics are one on top of the other. They're coming up like a shark about to breach. I'm looking for an area to trade from, guys. I'm looking for fibs, mid bands, 1-to-1s, and I'm looking for them to be inside of those favorable large triggers. So from your highest point of support to your lowest point of support inside of favorable large triggers becomes that area where the market is likely to continue, that window of opportunity. I'm going to right click on my chart right at the top and I'm going to activate a limit order and I'm going to wait for the market. And it's either going to come back to me or it's not. I don't control that. But if the market pulls back to that highest point of support inside of favorable large triggers, and guys, it's the highest point because remember on the 13.2, that market is screaming in the direction of the trend with odds favorable momentum. That market has absolutely nothing in the way to slow it down or make it bounce. So I'm in at the top, 79.21, and I'm in this trade with the equation met. I'm in with the advantage of momentum from those strong triggers on the 13.2. I'm in with the advantage of a clear path because there were no termination conditions, no areas likely to stop the market on the 13.2. And I'm in with the advantage of an entry area coming from the point where the market is most likely to continue. Guys, this is your equation. This is the look on the entry. Your initial stop, your protective stop is going to go beyond that window of opportunity where the market shouldn't go. If price continues down, exceeds that window of opportunity, then guys, you just don't want to be in that trade anymore. You've given up that advantage. It's no longer high probability. And it's better to exit a trade with a small loss than to hope, because hope is a very expensive accessory. I'm in this trade. My stop's below the window, guys, and I'll take this trade 1,000 out of 1,000 times. Because when I take the highest probability trend trade, guys, when I'm looking at that trade with all of those advantages, 70 to 80% of the time, this is my result. You'll notice that the market did push below my entry a little bit. That's okay. It stayed in the window. As soon as the market begins to move in the direction of my trade, I can reduce risk below that reversal bar. Because I waited for the pullback, my risk is reduced. My profit potential is increased. Guys, this is your best of the best. This is a trade I'm going to give you right now, a checklist, so that every time you look for an entry, you can put it up against this checklist. You can print this out, put it on your desktop. If you have Snagit, some people use Capture software, some people use Snagit. If you're using Snagit, take a picture of it. You'll be able to post it on every chart that you have. But all it does is it reminds you, it asks you, is the market coming from a good top or bottom? Did you have the momentum, the no termination conditions, the area for entry? Guys, if you get in the habit today of picking your entries based on this mechanical chart, it's going to increase your ability to recognize these trades. Is everybody comfortable with what we're looking at now? And let's put it together. Let me show you a picture with everything together. Putting the two charts together, when I have odds favorable momentum, and I'm going to draw a little bit for you guys. When I have odds favorable momentum, small's above the large are wide, they're angled in the direction of the trend. When I have no termination conditions, and guys, this is an important lesson. First thing that has to happen is price has to reach the area. In this case, price has not. Therefore, these aren't termination conditions, guys. These are what I lovingly refer to as targets. Because my distance to the target isn't this little area here. My distance to my target comes from the area inside of favorable large triggers. So with the advantage of momentum, the advantage of a clear path, I'm waiting for a reversal bar. At the time of the reversal bar, one of the easiest tools, especially if you're going historically, is draw a box from the top of your trigger lines to the bottom of your trigger lines. And then from that box, highlight your highest point of support to your lowest point of support. And guys, this becomes the area where the market is likely to continue. And what this area is, taking the entry, historically, is typically the bottom of one of those tails. Which means that when we scroll back on that 13.2 and we circle tails the way we did, all I'm doing is I'm scrolling back on my 5.1, have the advantage of momentum, an area with the potential to break. If I use that drawing tool from the top of my triggers to the bottom of my triggers, and then squeezing that box, highest point of support to the lowest point of support, guys, this fit the rules. This is a trade, and it went from about 40, 95, 50, 6 points, $300 worth of potential profit per contract before that market turned on us. Your job is to circle these tails, right? To see if it fit the rules, and if it did, and guys, this is such an important part of what we do, take a picture. Even if you're studying historically, take a picture, and then I want you to annotate your chart. I want you to write Rule 1, odds favorable momentum, yes. Rule 2, no terms, yes. And then you might even put under there 50-50. It has the potential to break, but it hasn't broken yet. And then on your smaller chart, you're going to write out, because you're reinforcing these rules, pull back to an area inside favorable large triggers. There it is. Guys, give me a Y in the room if you recognize this is a rules-based trade. This is me practicing my entries. This is me making sure that I can identify the place to get in. And guys, look at this. If I entered the market just above the top of the window, my initial risk is here. Once that reversal bar prints, guys, I'm looking at 2 or 3 ticks of risk. because I waited for the pullback, because I could identify where the market is likely to continue. Guys, the second half of your exercise, once you post it in the room, we'll have a conversation about it. Whoops. And then I need to upload it to Screencast, guys. Screencast is that magical cloud where every picture you upload goes so that you can come back and access it time and time again. I'm going to put that link into my spreadsheet. If it's historical, I'm just going to put it here, and I'm going to call it perfect trend trade long, right? Because I know it fits my rules. If I took the trade live, well, I'm going to post the link in here, and I'm going to start using these drop downs. It was a trend trade, right? But it was a 50-50 trade. Today is the 4th of May. I want to see my progress. How did I feel about it? Guys, with all of those advantages, I should feel confident or relaxed. But it was a 50-50, so I was a little nervous. I want to put that in there. Type of trade again, 50-50. May have to lose one of these columns. But I was coming from a strong termination condition that created a full reversal. My 13-2 triggers were strong. My 5-1 triggers had one divergence. Didn't use an 8 range. And guys, you know what happened? Is I won on my first target and I went break even on my second target because the 50-50 ultimately turned. That area didn't break as expected, which means that I won money, right? And then in my notes, I'm going to put had to manage out of second because of divergence or something like that, something clever. But now I can come back and I can study this each and every day. I can look at my links. I can look at my pictures. I can check out my favorite looks. And all I'm doing is creating confidence through the memory of success, guys. And sometimes the market isn't going to give you opportunities. Sometimes there's just nothing for you to do, guys, and you've got to accept that 90% of the time you're going to be reading charts, looking for advantages. Whoops, I thought I had crude up. There it is. And sometimes you're going to do great. Smalls are returning to the large. The large have broken through everything but the one-to-ones, which means that we don't have a clear path. So I'm giving away the advantage of momentum. I'm giving away the advantage of a clear path. You have to determine, are you still willing to take a trade with the forfeiture of advantages? You're in control of that. That's the only thing you get to control in the market. Gary says he's waiting for the termination to clear. I love it. So guys, this is your checklist. This is the rules that you need to write on your chart so I can hold you accountable so that we can make sure that you're taking the correct trade. I'm also going to give you this checklist, which I've stolen pictures from the resource materials. You can keep this one on your computer. What do these look like? What do strong triggers look like? What does a clear path look like? What's a strong top or bottom? You have those answers right here. And then guys, this is the part that I want to talk about just a little bit. Creating a plan for yourself. Putting yourself in a position where you can be consistent, where you can take that first 20 days and only focus on entries. And this is an example of how to write a trading plan. This is the most simple. It doesn't talk about how rich you want to get. It doesn't talk about how you want to buy a Ferrari one day. What it talks about is the definition of your entry. Use the phrase "my trade is" to define your entry point. Guys, make it personal. This isn't Nexgen's high probability trend trade. This is your high probability trend trade. This is Marshall's high probability trend trade. This is Mike W's high probability trend trade. It belongs to Joel, to Gary, to Mark, to Ziba, to Safia. Guys, make it yours. And to enter this trade, you must have the conditions of the checklist met. Hold yourself accountable. Is the market coming from a good top or bottom? This is going to increase the likelihood of success, but it's not mandatory for a great entry. Did you have odds favorable? Did you have no terminations? Was there an area inside of favorable large triggers? Guys, when you mark yes on all of these, that's your 70 to 80% potential winner. Creating confidence through the memory of success. And then you need to take pictures of your perfect long entry, of your perfect short entry, not of a winning trade, but only of getting in at the best of the best spot, guys. Study, go back and circle those tails. Steal pictures from class. Every time somebody posts a high probability trend trade in class, steal it. Put it in your spreadsheet. Remember that look. Grab them from the manual. They're all over the place in Discord, on the Nexgen website. But in the first 30 days, the more pictures you take, the faster you're going to get to where you want to be. The quicker that recognition is going to happen. I myself have probably taken about 10,000 pictures over the last year or two. I know John Novak is sitting somewhere around 30,000 pictures. Recognition comes through repetition. Put a couple pictures into your plan. What does my perfect entry look like? Well, let's click the link and find out. My perfect entry revolves around odds favorable momentum, no termination conditions, and then guys, pinpointing that area where the market is likely to continue inside of favorable large triggers and being able to take profits on the way down. That's my best of the best, guys. That's my commitment for my first 20 days. And then once I get great at these entries, it's time to start working on management, right? So while I'm working on management, before I can really read my charts, keeping it mechanical, keeping it pragmatic, keeping it emotionless and opinion-free typically is the best approach for new users. And this is that pragmatic approach. I will trade 2 contracts and my initial stop will be 12 ticks. That gives me enough time to adjust it above or below the window of opportunity. I'll move it 2 ticks above or below the reversal bar in the direction of my trade. And then I'll take profits on the first contract at $100 and I'll move my stop to break even. My second target will be 200. Guys, this very mechanical approach is in your spreadsheet. And I'm going to open up a couple links here. I'll trade 2 contracts, my perfect entry at the area inside of favorable large triggers. My initial stop goes outside of the window of opportunity where the market shouldn't go. My first target's at 100, my second target's at 200. Guys, I've entered the market, and now either the market is going to go to my first target or the market's going to go to my stop. But because of the advantages, I'm taking this trade every time it presents itself. The market moves in the direction of my trade, gives me a reversal bar in the direction of my trade. My new stop is a tick or 2 above. You can see the entry price. My first target is still $100. My second target is still $200. And once again, there's nothing to do now. My opinion doesn't matter. I'm either stopped out or my first target gets hit. Next piece of the puzzle is if my first target is reached, I'm going to move my stop to break even. I'm going to have 0 risk on this trade at this point. I have $100 in the bank. They can't take that from me. That's a dopamine kick, right? Holy smokes, I'm making money. My second target's 200. Once again, my opinion doesn't matter. I won't move my stop again. I'm either going to get stopped out break even or my second target's going to be hit. And if my second target is hit, this is a $300 trade, guys, on a high probability trend trade. $300 from 1 trade, 2 contracts, all the advantages. And guys, use your imagination. Hypothetically, if you win 2 of these trades a day, right? That's a $3,000 week. That's a $12,000 month, guys. That's $144,000 on 2 winners from a high probability trade. The reality is you're probably going to get 4 to 6 of them, right? But you're going to lose 2 or 3 of those. So ultimately, between winners and losers, guys, it's realistic to make $250, $300, $400 a day per contract. And then you'll let the magic of compounding take over. You'll let the magic of being able to go from a 2 lot to a 4 lot to a 6 lot and watch those numbers grow like that. And if you're using something like Apex, You can take that same $300 trade and spread it across 10 accounts, 20 accounts, and now it becomes a $600 trade and then a $6,000 trade, because you're taking one trade on one account and spreading it over more. So there's ways to take the most simple approach and create the highest advantage. And then this is where I implore you, new users. If you allow this to be your path for the first 20 days, you're going to understand how to read your charts. And if you understand how to read your charts, you're going to be able to read fluently where the market is likely to continue and use that for an entry point. Where the market is likely to go, this becomes your management plan. And where the market is likely to stop, keeping you safe, not trading into areas likely to stop the market, or using it for that anchor, for that highest probability trend trade, guys. The idea is to build a foundation capable of winning consistently. And then as you expand your knowledge, so will your plan. Good morning, John Novak. So guys, I'm going to put this example plan in the room as well. This is the first hour of class, guys. This is what we do. We talk about advantages. We talk about getting you where you want to be. The opportunity to be able to recognize these advantages, to be able to turn them into a high probability trend trade, to be able to be successful as you learn to read your indicators so that you can move on and grow. Guys, we're coming from a termination condition. It's created a full reversal. The full reversal's given me odds favorable momentum. And what do we see? I have areas with the potential to break, but they haven't broken yet. But I can still go through this process, right? I can still draw from the top of my triggers to the bottom of my triggers. I can identify areas inside, fibs, midbands, one-to-ones. Guys, these triggers and this midband are so close. The odds are favorable. They are going to collide. So based off of a termination creating a full reversal, this is a medium probability trade, guys, because 4085 hasn't broken. 4084 hasn't broken, but they do have the potential with that odds favorable momentum. One divergence lets me know that I'm losing momentum a little bit. It's a tiny loss of momentum on my 5-1. So we're going to take a look and we're just going to see what happens, guys. And this is what you're going to do every day. Every day you're going to gauge advantages. If you chose to take this trade, whoops, let me turn my chart trader back on. You would right click. You would activate a limit order just above that highest point of support inside of favorable large triggers. And this would be what we call a pre-trade picture, where you snap that picture and you say to yourself, these are my rules. Here they are met. You're going to annotate your chart. And the great thing is you can upload this picture to Screencast. And then you can post this picture in the room. And if you're brand new, you can say, hey, Mark, I saw this set up. And of course, you're going to annotate your chart, right? You're going to tell me what you see. Do I have the right idea here, Mark? Am I looking at these advantages correctly? And we'll talk about areas that haven't broken. We'll talk about windows of opportunity. We'll talk about divergence and what it means. And every day you're going to get that feedback over and over to make sure that you're comfortable with what you're seeing and that you're executing properly, you're following your rules. Guys, I'm going to leave you with the live market real quick. When I come back, we're going to get into the second half of the day. The second hour, we're going to look at your charts. Gary's put about 8,000 in the room, so we're going to have a lot to talk about. If you take a trade, post that picture, guys. If you think you see something, but you don't take a trade, post a picture, write on it, let me know. Guys, if you're brand new, my Mark W's, my Marshalls, who else? My Billy Rays. Take a picture of your charts and let me know that you're comfortable. Tell me what you see. Practice writing on it. Practice getting in the habit of having conversations with me all day. There are 0 questions that are off limits. I mean 0 questions that are off limits. We'll cover anything, everything, and clarify anything and everything that you need clarity on. I'll be back in about 5 minutes. When I come back, we're going to start that second hour, guys. All right, guys, I am back. Well, it looks like, is it just me or did that continue the first leg from the bottom of the window of opportunity? And then when we get a lower divergence, a second problem on a 50-50 trade, if you were in, you knew where your stop had to go. You had the potential to take profits to get to break even. And guys, this is why we teach the clear path first rather than the 50-50. The 50-50 becomes one that has to be managed. And I have a picture that kind of puts into perspective my feelings on the 50-50 for a brand new user. Guys, if you're going to take a trade with an issue, a small issue exists, and let's go back to the definition real quick. And then we'll get to your charts, I promise. A medium probability trade, and that's what that 50-50 is. Guys, a medium probability trade means that a small issue exists. And I think it's important that you embrace the language on this one. It doesn't say that several small issues exist. It says a small issue exists. And this will be the vast majority of your trades, but when you're executing them, you have to take these trades and manage them assertively. If there's trouble in your way, you may take a portion of the position off at the trouble spot, get to zero risk as soon as possible. So when we talk about medium probability trades, that 50-50 is your first medium probability. 4,339 has the potential to break, but it hasn't broken. So when I come to my entries on the 5-1, guys, I think that for the brand new user, as you learn the software, the idea of simplicity needs to be embraced again. Not having any issues on your 5-1. No divergences, right? No losses of momentum. Making sure that your trigger look is strong, that your smalls are outside of the large, that momentum is in favor and corresponds with the 13-2. And making sure that you have a small window of opportunity. There's no reason to put a tremendous amount of risk on a medium probability trade. We see it again going the other direction. With that odds favorable momentum, everything says up. No divergence, strong triggers, tiny window of opportunity, guys. There's really only one place where the rules say this market is likely to continue. Embracing that look, understanding that 50-50s rely on odds favorable momentum, what it does is it puts you in a position to make a decision. When our window of opportunity was formed, guys, it was 3 points wide. Maybe even more. You had 12 ticks of risk before you ever had to go beyond that window of opportunity for stops, right? That's a huge amount of risk coming into a medium probability trade. You also had a loss of momentum, letting you know that this area wasn't broken, but you're also losing momentum. So that becomes multiple issues. And if you begin to look at every trade, starting on the 13-2, what do I see? What is my best look? What are the options? And then the 5-1 saying to yourself, well, I'm going to let this one be perfect. My money is worth a perfect entry when I've got issues on my larger, faster market moving chart. So something to think about on that 50-50 style trade. And that will be your first medium. And guys, we're going to go to your pictures now. I'm going to scroll up and I'm going to start clicking on your pictures. When I look at your pictures, I have to go through this chat box and I have to get up to the top and I've got to go back and forth and I've got to see and then come back and answer your questions. So do me a favor, if I miss a question, if I miss a comment, if I miss something, let me know so that I can come back and get it. I never skip anything intentionally because I don't think it's a good one. Gary got us started today, guys, and I want you to pay attention to Gary's charts. Gary's charts have a checklist. And remember that my job is to hold you accountable to your rules, right? To help you be consistent with your rules. And I love that it's a checklist. Is there a good top or bottom on the S&P? He's saying this is not a termination condition that creates a full reversal. So he put no, and he knows that that's not mandatory, but it does increase the likelihood of success. Termination conditions on the 13-2, he put no, but it is a 50-50. So he identified that. This is a 50-50 trade, but it does have odds favorable momentum. Does he have an area for entry inside of favorable large triggers on the 5-1? He most certainly does. And on 50-50 trades, he said that if there's no divergence, if there's no challenges, he'll get in at the area. If it does have divergence, he'll use what's called a market flow signal. And guys, that's exactly what he got. Gary, great job. And by using a different chart for that confirmation, guys, this is where you take those best of the best entries. This is where you take that 50-50 trade that has 0 challenges. And when you add a challenge to it, such as a divergence, you can use what's called a market flow chart, an 8-range chart. And we'll teach you how to use it after you're great at finding those entries. Without it, you can use it as a confirmation tool to help you get into a trade. It doesn't guarantee a winner, but by waiting for this market flow signal on a trade with an issue that created a second issue, Gary was able to get a little extra confirmation on that one. Nice job, Gary. Great job using your checklist. And then here's the exact same thing, right? 50-50, divergence prints, market flow. Did not get the market flow signal. So that would be the only one right there. Not an actual signal, but still a great trade, right? Higher divergence, everything says up, nice entry. Gary, I took this exact same trade this morning, and I was so excited about it. And it was kind of funny. And I'm going to share with you guys, because we all make mistakes, right? Took the same trade, Gary, with market flow confirmation, but it didn't have it, but I knew what I was looking for. Took profits all the way up. And then, guys, I was on simulator, which cracked me up. I sent my brother a message. I was like, dag nabbit. And then one more, Gary. You're barely eking through, right? Don't have odds favorable momentum. There's divergence printing. And this becomes a much lower probability trade. Don't have that best odds favorable look that typically pushes the market. The smalls have barely eked through the area, and you're losing momentum. Great point for profits. That's a rough entry. And once again, you didn't get a confirmation signal. Gary, I think, and guys, this is what we're going to do every day. These are the conversations that we'll have. So Gary, once again, I'm going to encourage you, if you're going to use market flow signals in your rules, make sure that you understand market flow signals. Go back, take pictures. Because 2 out of 3 confirmations didn't actually have confirmation. Yeah, and then take a couple pictures. Just scroll back on your 8 range and just start taking pictures and pointing out what could be a reversal bar marker in a course, or a signal. And of course, it's when the rules are true and you've got your rules down 100%. But just a little bit of study on that is probably going to pay dividends and help keep you a little more consistent. Great pictures this morning, Gary. Guys, take pictures of everything you do. Take pictures of everything you see. And what you'll notice on Gary a lot is he's not only taking pictures of trades, he'll take pictures pre-trade, post-trade. He'll take pictures of rules met, of rules not met. Look at this one, 50-50, everything's up. There's your first divergence. And here you are in. The bar that you entered was a great confirmation bar. Quick profits at the trouble spot, second divergence prints on a 50-50, and you say, you know what, I'm out. Great trading, Gary. You are solid today. And look how this works, guys. 50-50, right? Barely eking through. It comes back, and you just don't have any time to do anything. If you're going to do the 50-50, let me scroll to the bottom because I want to make sure that everybody knows this. Mark, I got you. We'll do it right now. Guys, remember, if you're taking a 50-50, The most important part of a 50-50 is the odds favorable momentum. We ignore that when we want to be in a trade, guys, but the most important element of an area with the potential to break is having that best of the best odds favorable momentum, because if you don't have anything pushing through that area with the potential. And I see that a lot, and Gary, that's what got you on that one. All right, Mark W., are you ready? Go to your search bar, and you should have TechSmith Capture. Will you do me a favor and take a look and make sure that you do? And then if you do, I want you to click Open. Can you see down here where it says Search? It's in that toolbar at the bottom of your computer. Or you can also click on this, and it'll provide you a search bar here as well. And if you click on the search bar, it'll show you your recent ones if you had them. But what you can do is in that search bar, type in Capture and see if that capture software comes up, and let me know when you get that. Guys, this is the most important part of you learning to become a day trader, of you being proficient, is your ability to take and post pictures. And I will stop class dead in its tracks 1,000 out of 1,000 times for you to have this. Snagit's given 15 days free. That's awesome. Guys, it doesn't matter if you have TechSmith Capture. It doesn't matter if you have Snagit. I prefer Snagit because it's got a lot of bells and whistles. And Cam, get out of my head. I think it's up to 63, Rain. Or maybe not. Maybe it is 39. I forget. So Mark W., if you can't find it on your computer, I thought that it got downloaded with the indicators. If it didn't, all you have to do is, Cam just gave you that link. Click on it, and you're going to come to your free download. And guys, this is how fast it happens. Are you ready? Free download. I'm going to do it for Windows, right? We're a Windows-based program. There is my setup down here. If I click on it, it's that fast. I have to accept, absolutely. I want to drink the Kool-Aid and be a part of your cult. Click Continue. And I've probably loaded TechSmith Capture on my computer 1,000 times just doing this example. It's going to take a second, and then you're going to see an icon. Boom, there it is. Where did it go? Oops, I have to close it. I confused my TechSmith Capture, guys, by reloading it over. Sorry. I'm going to open up my task manager real quick, and I'm going to get rid of TechSmith Capture and end that task. But that's how quickly you can upload that and then bring it up. And it should come right up. And then it comes in with your capture right here, guys. So Mark, do me a favor. Let me know when you have it. And we'll go through how to take the best pictures, how to give me the best information, and how to put yourself in a position to create pictures that are easy to study, that verify, that validate the rules, and create that memory of what it should take to get you into the market. And while you do that, I am going to take a look at the next picture. If you need help with it, Cameron will get you, of course. Reach out to him real quick. I'm not very tech savvy, guys, so for me it takes a minute whenever I'm learning something new. All right, Gary, once again, termination creates a full reversal. No worries. Billy Ray, do you have TechSmith Capture on your computer? There's that link once again to TechSmith if you need to download it. Knock that out for me real quick. And then, guys, once you have it up, we'll go through everything about taking a picture. But I want you to be able to follow along with me. Cool. Just let me know when that comes up, guys, and we'll go through it. Be loud in this classroom. Make sure that you get my attention. Gary, let's see what you got. We've got a termination, creating a full reversal, creating odds favorable momentum, said divergence printed, but the large weren't clear of support, right? That's okay. The large don't have to be. The small triggers on the 13-2 have to be. And if they weren't, then that's okay. No worries, right? And then you have that big window of opportunity on split triggers. You did get confirmation for the trade. And because it's a termination, creating a full reversal, giving odds favorable momentum, because you have strong triggers, because you had confirmation, certainly one that would have fit the rules if the smalls had cleared. But since they didn't, you chose to wait, which I think is an amazing job of following your rules. Guys, rules are easy to write down. Checklists are easy to create. Believing your rules so wholeheartedly. They're your ride and die, right? That is your what it's going to get. All right, and then here we go. Termination condition. Look how this termination condition creates a big old bounce, right? I love it. And then we have weak triggers out of termination condition. And Gary's like, man, I'm just going to wait. My job is to have advantages. My job is not to predict the market, to hope, to guess, to want, to pray. And it goes down a little bit, and then it comes right into that termination condition. You wanted to take this trade since the mid-band was supported by the fibs, but the checklist said no. I love it, Gary. Termination condition, rule number 2 is not met. Strict adherence. And guys, this is going to get frustrating when you think you see a trade over and over, but you don't. Gary, check out your market flow right where you wanted to enter the trade. Even your market flow said, Gary, good job following your rules. No signal. And boom, rules keep you safe. Gary, you are putting on an absolute clinic this morning, and I appreciate that. I know you would have. And then you would have justified it somehow. Because that's what we all do, right? Guys, Discord just booted me. Give me a second. I'm going to be right back. And this is why annotating your charts is such an important part of what we do, guys. When you annotate your charts, what you're doing is you're really confirming your ability to follow the rules. You're confirming that you just broke your rules, which is cool. You're going to do it every now and then. But the better you annotate your charts, the more rules you write on your chart, the more information you give yourself, and the more honest that you are with yourself, the quicker you're going to reach those goals, guys. Everybody can see my screen again? Yes? Billy Ray and Mark, how are we doing on that TechSmith capture? Did you get it? Don't be shy, guys. If you need help, let me know. Cool. Billy Ray, are you with me? Because I'll take a pause from pictures. I love taking pictures, guys. Makes me happy as I can be. So 2 charts, right? And guys, I double checked with my tech guy. It should already be on your computer if you search for TechSmith. Still trying to download? Billy Ray, do me a favor. Do you see the search bar down here in your toolbar? Just type in capture, because it should be a part of the load when you got your indicators. And if not, keep going on that download. Don't feel rushed. It's okay. Your computer's only going to go as fast as your computer goes, but it may already be on your computer. So we'll give you another second, and I'll go and I'll check out a couple more pictures, guys. This is what we do every day. We talk about rules, we talk about advantages, and then you guys post me pictures of your great chart reading, morning sim practice. Triggers as strong, those one-to-ones didn't stand a chance. Not your typical trade, but a good lesson. Guys, Ron has taken a plan that says with this much momentum and nothing in the way on the 13-2, he'll take a little chunk out of that move based on momentum. It's a different look. It's not a high probability trend trade, but it uses the advantage of momentum. It uses the advantage of a clear path. And then Ron has developed an opportunity for entry that gets him clear of the problems and out before the next problem is hit. And the one thing I like to point out about Ron's is that every trade that Ron posts in this room looks the same. Everything fits the same set of rules, is consistent, is testable, is repeatable, and has been verified to win more than it loses, which is why he finds such a high level of success with this trade that suits his comfort levels. Gary, weaker triggers, loss of momentum. I like the entry in an area inside of favorable large triggers. Real close to that clear path. You even had an HVA. Gary, this one just didn't work, right? Not the best momentum. The momentum is waning. We see it losing again right there. That's the only issues on this one. It's a good looking trade. Didn't have odds favorable. We're returning. That space between the two is the best of the best look. And I'm not saying that this isn't a great trade. This is one that didn't work, and that loss of momentum may have been a contributing factor to push it down a little bit lower. And then Jose, same trade, right? Smalls above, not the best. Certainly not the worst. And Jose, what happened with the short trade here? Notice you didn't post that one in the room. Guys, we hate posting losers, don't we? It's a look you're trying. Are you trying it on sim? So Jose, do me a favor. As you begin to study new things, and guys, as you begin to study new things, this room isn't just a high probability trend trade room. I don't know if you guys know this, but I'm really good at reading indicators. I'm really good at recognizing advantages. Jose, show me this trade. Write your rules on it. Let's talk about it. Maybe we can refine it and turn it into a trade that works. Because if you went short right here with those large triggers all the way back here, we could probably develop a plan. But going short after that gap's already been filled creates problems. And then this one just giving away the advantage of momentum, and it just doesn't work out. But guys, don't be afraid to share everything. I want to help. So Gary, bad bottom. Looks like this one-to-one came from the mid-band on the 21-3. No, they're unrelated. They're unrelated, Gary. 100% unrelated. The 21-3 mid-band is a moving average based on the 21-3 chart. You're still trying, Billy Ray? And Billy Ray, if you need help, like if something's not going right with your computer, feel free to swing over to tech. Drop a ticket in there real quick. Jason will figure out what's up and what's wrong. Cameron can probably also give you a little help with that as well. Both of those guys can get on your computer and do things a little bit faster. Guys, if you have a tech problem, don't be afraid. Use tech. That's what they're here for. Our support's here for you all the time. Gary, the challenge on this one, it's not that it's a 21 mid-band creating one-to-ones. It's that it's a 21 mid-band from a bad top, right? And from the large triggers. So I'm a huge fan, guys. If you're gonna add charts, that's cool. No problem. If you're going to add a 21 chart, well, then you have to respect this mid-band from a bad bottom, right? Because that's the first target. So what you're doing here is, let's look at it and let's work it across the screen. Mid-band from a bad bottom, guys, this is the first target, especially when those large triggers aren't following along. And then we have a loss of momentum here, and then we have a loss of momentum here. And what happens is this is a trade that has a low chance of winning, that has a lower chance of winning because of this, that has a lower chance of winning because of this. And you'll break through this. Guys, the problem with more charts, and I'm not saying this is what you did, Gary. The problem with more charts is if I have 7 charts up, I'm going to pick the chart that gets me in a trade. I'm going to give more weight. It's what I call the Baptist approach. We pick and choose the parts that we like, right? I love that this is green, even though it doesn't have great momentum. I love that this is an area of support inside of favorable large triggers, so much so that I'm willing to ignore this divergence, that I'm willing to ignore this weakening of the triggers, that I'm willing to ignore this mid-band on the 21.3. Does that make sense, everybody? This is why I always encourage you guys, keep it simple at first. Work on those entries. Work on the best entries. Because the more information you give yourself, the easier it's going to be to talk yourself into or out of a trade that doesn't fit the rules 100%. And I'm not sure what this is. Gary, this was a 50-50 no divergence, and you said you missed it because you were posting up. Gets frustrating sometimes missing the right trades because you're annotating and posting the wrong ones, right? David, you clear the path, right? Get in. That one doesn't work out for you. But then you are very aware and you take that perfect trend trade and you make money, and then you get into your momentum and you let divergence take you out. And then I think you held that second one a little bit long on a momentum. At this point, you're getting out at the area inside of favorable large triggers after that trend trade had already set up. Great trading, David. That one I see why. Remember, though, that's not a clear path. That's a potential termination condition right here. And then once the smalls break through, then that path starts to clear. And that becomes a 50-50, and that's where that pullback came from. Does that make sense? I hope that makes sense. Yeah. Great trading, though. I love it. You're trading with momentum. You're trading with direction. And I think that that first opportunity, the smalls hadn't broken the trouble spot yet. And once they do, it becomes that 50-50. And those 50-50s are more likely to pull back than become a momentum style. And then once everything starts to break through, that's when you start looking for those others. But great job. That's a lot going on in a short amount of time, isn't it? Got to be comfortable with your rules. Jose, beautiful. And then Jose, same thing. Guys, momentum style trades on a 50-50 are less likely to work. And is this the one that you were looking at? No, not yet. Guys, if you don't have a clear path, even with the momentum, and Jose, do you see how we're on the wrong sides of the small here? Just a good little heads up. 50-50s tend to push back, and I love that you got your entry here. No worries, Billy Ray, I got you. So we'll go into capturing a picture right now. Jose, you exited at an area of resistance inside of favorable large triggers on a divergence-free 50-50 from a great top. And I noticed that it's 10 ticks, right? So this becomes a management opportunity. Don't put your stops where the market's likely to continue, right? Jose, if you're getting in here, your stop either has to be on the other side of this fib, which is where your entry should have come in, and that's a tight stop momentum kind of trade. And then because it's 50-50, it pushes back to that trend trade, and you're able to recapture. Nice job. Right on. Keep doing it. So your best look, Jose, when you're doing that momentum style, let the area clear on the 5-1. So one of the things for that momentum style that you're looking at, and I'll show you, let me take a picture and I'll show you. And then Mark and Billy Ray, we're going to capture pictures right after this. Is Jose, what you're looking for is you're looking for that market to break and then pull back, right? But you still want that price. You don't want it already trading to the other side because that's beginning to show weakness. So for example, where we break and then pull back, see that little tail right there? That's your momentum right there. Everything screaming down, everything on the right side of the trade. That little stab back has a better chance of winning than this little stab back because look at which side of the small triggers price is on. Does that make sense? I hope so. Cool. Just stuff to think about as you log. And guys, what Jose's doing right now is he's saying, hey, I'm on simulator. I'm not risking money. I'm checking out this look that I think that I see, and I'm going to create 50, 100 pictures so that I can maybe create a plan. All right, Billy Ray and Mark W., are you ready? Capture software up on the screen. We're going to take a picture, and all I have to do is hit this big old capture button. When I hit that big old capture button, if I hang out over just one chart, it's going to take picture of only one chart. If I click it, click that camera, I've only got one chart's worth of information, and it didn't show up. There we go. And this is fantastic, but this 151 chart isn't going to show me the advantages on the 13.2. So when you take a picture with Capture for Class, click that big red capture button. I'm going to left click at the upper left-hand corner, and I'm going to drag down to the right. And when I release, it's going to give me this camera icon. Whoops, come here, camera icon. There we go. And I'm going to click it, and now it's going to create my image preview, guys. And this is going to be how you and I have a conversation. You may say to yourself, well, price reached this mid-band, Mark, and I noticed that the large triggers were a full bar away, which lets me know that price is likely to pull back to those large triggers, so I'm not looking for longs in here. If you do take a trade, you're going to write your rules on there. This is why I got into this trade. This is what I saw. And guys, it doesn't matter if you're right or wrong. You are not graded on your ability to take a great trade. You're graded on your ability. You're not even graded. But I am reliant on your ability to tell me why you did what you did so that I can get you to that next step, so that we can get you to that next piece. Mark W., are you with me on the pictures? Once you take this picture, once you annotate the chart, there's two things you can do. You can click this copy button, and it's going to copy the picture to your clipboard, and you can post it directly in the room. Copy paste, or just that click V, Control V if you're in the pop out. But I think what the most important thing to do is hit this upload button. And what that upload button is going to do is it's going to give you that screencast link. It's going to put that picture up into the cloud. When I hit copy on this, it's going to save that link to my clipboard, and it's going to stay there until I copy something else. So the first thing I'm going to do is I'm going to post it in the room, and then we're going to have a great conversation about everything that you've done, everything that I see, everything that you talked about. And then the next thing to do is to pull up your spreadsheet. If it was a trade that you took You're going to post it into the spreadsheet under the trade link picture. You're going to tell yourself, what kind of trade was it? Well, there were no rules. I just jumped in. How did I feel? I was bored. That's why I jumped in. Type of trade was it? It was a made up, no rules. Who knows? We're good. And then you're going to come through and you're going to identify everything, right? This is what I saw. This is what I thought I saw. This is what I think I saw. Whether you won or lost. And guys, it's okay to lose a trade, especially if you take a picture, so we can talk about what may have gone wrong, because sometimes you're going to lose a trade and it's going to be the perfect trade. So that's the first step. The second step is, if it was rules met, drop it into this. Make sure that you can come back and study that rules met trade over and over and over again. So get that feedback in class, right? Get that feedback. Everything you do so that we can help make you better. And then, Billy Ray, if you'll do me a favor, take a practice picture. Drop it in the room. Mark W., take a practice picture. Drop it in the room. And let's just see where you're at. All right, Jose, this is the one you're looking for. Let me see if I can help. So you're saying momentum trade, right? So you were looking for the long. The smalls are outside. These are flat. Not really momentum when you look at the charts, right? And Jose, the key for the momentum trade, and let me help you with this one a little bit. Let me pull up Discord and go to the momentum rules. And this is really a key part of it. For you guys that are looking for momentum style trades, is those termination conditions, nothing in the way, but you really want to be coming from a good top or bottom. So if you're trying to catch a top or bottom, you want to be coming from that good bottom. And what happens here is, Jose, you've already reached your target, that mid band, and the large triggers are a full bar away, so you're trading into that vacuum. And guys, this is totally normal. As you begin looking for new trades, it's going to help you. And exactly how to drop it in the class, Mark W. So there's two ways. You can, if you're in the pop out, you have to come to the chat box and hit Control V, and that'll post it in the room. If you're not in the pop out, you can just right click and paste. Right directly into the chat box and hit enter, and it'll give me that picture. So Jose, I like the idea on this one. But yeah, I think you did a good job of identifying why that one probably didn't work out so well. Gap theory got you, right? Large triggers flat, didn't even have the momentum yet. Momentum style trades need odds favorable momentum, especially if they're not coming from a good bottom or a good top. Great picture though, Jose. I love it. It's just building a plan. That's all it is. 50-50. Oh, it clicked you and didn't get you. Perfect look, Jose. Nice job. Just didn't work. Sometimes it's not going to fill you. And then Zeba, odds favorable momentum, no termination conditions, picture perfect entry, quick profits, break even. Zeba, nice trading. Very well done. You got that fill. Jose, Zeba took your fill. Nice job. And then David, he left it for her to have it. Chivalry. Great picture, Mark. Your bars are a little weird on your 13-2. They're super thin. Did you want them that thin? Some people like the looks like this. It looks like you've got a couple different thicknesses coming through. And that may have been intentional. Absolutely there is, Jose. Go to new trade performance. And then what it'll do is it'll let you pick your date range there. And it'll come up and it'll show you your net profit, your total profit, your win percentage. So you're going to do new trade performance. And then once you do trade performance, whoops, I just made that bigger. It's going to bring up this window so you can put in your trades, your days. It'll show you your total net profit, long trades, short trades, gross profit, gross losers, the commissions that you paid, your profit factor, your max drawdown. It'll talk about your win percentage. 80%, not so bad, right? I like that. Number of winning trades, number of losing trades. So all of that comes from new trade performance. So Mark, great job on the picture. You're welcome, Jose. And Ziba, you're absolutely right. Ziba, you were a tick or two below that area. And Jose may have been as well. It just got you. Guys, I've had trades that fill me. I've had trades that don't fill me. I've had trades that fill half of my contracts and not the other half of my contracts. All right, David, clear path, odds favorable, everything down. And man, that one just didn't work so much. Where's your stop? There it is. You've got your stop up where the market shouldn't go. I like that. I hope this one worked out for you down to support. I think this one may have turned, though. I believe that was the trend trade that Ziva took that was short-lived. And then George T. Good morning, George. George asks, am I correct? This is a momentum trade, or is this a jump-in kind of trend trade? Let's take a look, see what we can figure out here. So this is gold. 21.3 is screaming up. 8 range doesn't have odds favorable momentum yet. 13.2 is in a strong trending market, right, George? So everything says up. The path is cleared. It's not a trend trade. What this is this is the market dancing around 63, right? This is the market taking that key area. Awesome, Ziva. George, do you see how things are, everything is kind of sideways right at this key area? And guys, this is a great lesson. Price reacts to Fibonacci. Price will react to these one-to-ones. Price will react to these Fibonacci support, resistance, all these areas. And you're seeing it on a smaller, faster chart. So George, I love everything about this because you got to the area and it wasn't pretty on the 5-1, right? Multiple divergences, a trend change. So what George did, and correct me if I'm wrong, is you're waiting for everything to agree again. This one, I think, was a little hopeful because you're on the wrong side of everything after 3 divergences. It worked, but once everything agrees, once everything goes green again and lines up back again with that 13.2 that has cleared the area now you've got that clear path in a strong trending market to find that next fib. Does that make sense? So it's not really a momentum trade because you don't have momentum. Yeah, so momentum is small outside of the large, right? So if we're being a stickler on the English language, the momentum wasn't there. You weren't wide outside on your 13.2, but you were in a strong trending market. So what you did, George, And let me take a picture and just kind of illustrate on two charts. And you probably know this, but I want to make sure everybody knows this. Is what you did is you took an area where the market's likely to continue from, right? Everything gets above. We're in a strong trending market. And you see a problem, a problem, a problem. And you don't know how far down this problem is going to push, right? You're just not sure. So when you have these problems without the advantage of momentum, but everything says up and we're clearing areas, you create a very distinct advantage for yourself, getting beyond the problem and letting every chart agree, right? Everything's green, everything says up. The small triggers are up, the large triggers are up, the synthetics triggers are up. The 13.2 has cleared the problem, and it does help. And then you've got that last push down. The buyers didn't lose momentum, but the sellers did. You let everything clear and take it up. I like everything about this trade, George. I don't know what kind of trade I'd call it. It's a great patience, letting everything agree trade. But I can't call it momentum because I really don't have momentum until I never really get a great look at momentum on the 5-1. And then on your 21, well, if I look at your 8 range, I really don't have momentum on the 8 range either, but what I did get was a beautiful reversal bar, antenna bar off of an HVA that supports the 21, that supports the 13.2, that supports all of those trigger lines rolling and looking for the opportunity up. So it's a beautiful trade, and I think that the key to it, well, I'm sure that the key to it is waiting till everything agrees. And once everything agrees, it certainly takes a lot of stress out of it, doesn't it? Nice trade, George. And then David, you said it didn't work. No, and that higher divergence lets you know. And that's going to be one of the pitfalls. Not every one of these can work, right? So David, the real question is, would you take that one again? Because this look is every bit as pretty as this look, isn't it? It just didn't work. Guys, the sooner you come to terms with the fact that you won't win every trade, the easier it becomes. When you stop worrying about wins and losses and worry about execution, the wins tend to show up a little bit more. And David, I can tell you without question that this look is exactly like this look. The momentum is there, the clear path is there, everything is there to fit your rules. This one decided, and without warning, no divergence, this one decided to push back up to the mid-band. And you know what? We don't control the market, right? Someone else is doing that. All we're doing is we're trying to pluck advantages out of it. Gary, there's that 50-50, no divergence, beautiful entry. When that divergence prints, you said, you know what? I'm just not going to try it anymore. Great trade, Gary. Beautiful management. And then Jose trades. Yeah, he does. Jose lost some momentum on a 50-50. No divergence, so you took it, and this one worked out for you. That divergence starts pushing it lower. And this goes into that kind of order of operations. The 21 says 50-50 from a bad bottom. The 13.2 says 50-50 losing momentum. You got in on the first one. And your stop kept you safe. And it looks like that had to be about a 14-15 tick stop. That's a pretty big stop on an area that you're hoping that it's going to break. I love that you got paid. 12 ticks, that was it? You were in at 10. It's hard to see because it's behind something. So you had that 68 flat. Nice. Behind the one-to-ones. Cool. Right above the one-to-ones. All right. As long as you recognize, I like the trade. It looks like it fit your rules 100%. As long as you recognize that 50-50 trades work a lot better with odds favorable momentum. Strong triggers break things, guys. Great trade, Jose. Great execution, nice management, right? Quick profits. And then when that divergence prints and the triggers are inside, you're like, man, party's over. No reason to give it all back. I think that the execution on this one is beautiful. Nice job. Great entries create manageable trades. What have we missed? Little bit of overrun. 50-50 with divergence. So maybe we're not taking that 50-50 with divergence. Pushes all the way up to resistance. All the trigger lines are beneath, therefore no long trades. And now all of my trigger lines are above support. Guys, you are in this wonderful moment of watching Fibonacci areas duke it out. From 75.50 to 80.50, we're waiting for one of these to break and we're waiting for that clear path. And until you get it, you can sit on your hands. You can be patient. You can just wait. I don't have odds favorable momentum, right? I don't have a clear path to the top. I don't have a clear path to the bottom. I've got synthetics down. I've got large up. Guys, there's so much indecision right now. You can try and predict and hope you're right, or you can just wait for a clear path. Odds favorable momentum. A little bit of overrun. Those divergences let me know that it's probably overrun. There's a third lower. Pushes down. That resistance holds without question again. And now we're just waiting for that little roll, right? Waiting for that little something to get our rules met for a trade. Same thing happened here, guys. There's those weak triggers on a 50-50, and look how far back it pushes. And now the smalls are below the large, and now the large are rolling, and we're having multiple divergences. Guys, price is reacting to Fibonacci. What you're watching right now are these big money investors at key areas, and the buyers and the sellers are duking it out, guys. Brass knuckles and billy clubs, going after it, trying to come up with supremacy. Be a remora. Let them fight. Let them do the dirty work. Let them risk their money. And then let them establish momentum and a clear path. And guys, we'll jump in and take it. Look what's happening right now. Ready? We'll just take one chart. The buyers were in control. And look how they're losing momentum, right? Look how those large triggers can't push through. Guys, that's a visual that the buyers are starting to lose steam. And the sellers say, hey, what's up, buyers? Let's make it go down. Maybe people take profits. Maybe the sellers push. And do you notice how they get it right to the mid-band, right to the one-to-ones, at which point the buyers go, hey, you know what? I'm not cool with you pushing down. I'm going to steal your momentum, and I'm going to push you right back up. And guys, they close the gap to those large triggers a full bar away, and the sellers are waiting for them, right? And the sellers fight back, and now they're right to those one-to-ones, right to that divergence low. And it looks like the buyers are pushing again. Guys, you can see this with Fibonacci. Can't you? You can say to yourself, let it clear. Ziba, I have seen 5 charts from you in the last 2 weeks. I have absolutely no idea if it's time for you to trade live. But the flip side, let me give you the other side of that. Oh, look at that. Sellers are pushing, right? So Ziba, I don't know, but let's do this. Are you ready? Oh, you guys are going to hate it when I do this because this is your Sunday school answer again. Are you ready, Ziba? Do you know your rules 100%? Are you comfortable with them? Do you second guess them? All right. Have you simulated your trades, and are you only taking the correct trades, not the wrong trades? Feel good about it? Yeah? Is your plan simple, easy to execute for you? You're confident? Super simple. All right, so you've done that. Are you always taking the correct trade, Ziba? %. Are you winning more than you lose? Have you guaranteed yourself that you can win? Yeah? So Ziba, I'm not going to tell you it's time to trade live. Whoops, wrong one. But what I will do, boom. So accept, and it's hard to do because you know you're wonderful and I know you're wonderful, but accept that maybe you're not as good as you think you are, right? Because simulator and live typically are different animals. So Ziba, now this is where you can go to one of those prop firms, and for like 50 bucks, you can control $50,000, right? You'd be amazed. Everybody reacts differently, but guys, do me a favor, give me a hand in the room if when you went live for the first time, there was a pucker factor that put a pleat right in the middle of your chair. I did. Yep. Everybody, Ziba, because it's normal, because now there's something at risk, right? So why not use a small amount of your money to control a large amount of money, and Ziba, test your trading plan. Because the reality is if you don't react any differently live, well, you're going to get funded and you're going to trade somebody else's money, and it's going to be amazing, and it's only going to cost you like $100. But if it turns out that you're willing to break your rules under pressure, well, then you don't do what I did and lose $5,000 in 2 days because you thought you were ready, because you felt entitled to win. I felt entitled to win. You may not. And there's no penalty for being cautious. And the actual harm comes from thinking you're a better trader than you are and blowing out a large sum of your capital. This is John Novak, tough love talk here. But the reality is that if I had a trading firm like Apex or something like that, or Earn Trader or Top Trader or anything like that, the first time I went live, rather than blowing out $5,000 instantly and taking myself out of the game, it would have cost me $50 on a credit card to realize that I need to go back and just build a little bit more trust. Does that make sense? So on paper, I love it. I think you're in a great position. Go look through, and if you have questions, there's so many people using this. But usually are they doing a sale right now? I control $50,000. It costs me $36 a month. Isn't that better than potentially losing $3,000 to $5,000? The biggest reason that traders quit trading, it's 90% off right now. $18 to control $50,000 worth of money. And then if you pass their test, right? And what does that mean? If you make $3,000, no, I'm not making fun of you at all. It sounds to me like you're selective. So Ziba, make that $3,000 before you lose 2,500. Let them give you 50 grand. You'll keep 90% of it, right? But what you will have done more than anything is you'll prove to yourself that your plan is a good one and you can follow it without the risk of all your money. And I don't give trading advice, but I'm telling you that this is an amazing path. And then once you're making money with other people's money, 90%. So Ziba, 90% for Apex right now. So, and the cool thing is you can run up to 20 accounts and have them go side by side, where you only execute on one, but it prints or it takes trades on mirrored accounts like that. So one day at $2,300 is 20 accounts at $2,300. And that's something that you can work into, right? So EarnMax has an offer that ends tomorrow, $150,000, control it for $14. So they're out there for sure. In Ziba, there's zero difference. Trading live is just like Sim. The only thing that's different is the emotion that you put into it. So the prop firms give you a little bit of safety net in the beginning. And guys, I'll never tell you to take trades. I'll never tell you what to do with your money. I'll never tell you how to execute. All I'll do is I'll talk about rules and that path to getting there. And then it's up to you. Every site has cookies, right, George? That's what I'm realizing. Every site has cookies these days, and they all ask you for it. It is what it is. Guys, if you think people aren't watching what you do, you're wrong. If you have a driver's license, they know everything about you. It doesn't matter what you do on the internet. So Ziba, I think that you've really embraced the path, right? And you're proving to yourself. And you know what? One of the most, gosh, I don't have it anymore. I don't know where it is. But one of the things I was Googling, because I Google a lot, signs you're becoming a confident trader. Signs you're on your way to becoming a profitable trader. And you know what one of them was? Very selective. Very selective. Taking trades that fit your rules, not taking trades because you want to be in a trade. Very selective was one of the first things as you find yourself trading less. And the great thing is, Ziba, is if you start out with a 2 lot, right? And you make $100 a day live, whatever, that's cool. Make it a 10 lot and that 200 becomes 500. The same simple selective trade. So what you can do is you can allow multiple contracts to get the most out of that best at best. That very stringent, approach to it. It's never about taking more trades. It's about taking the best trades, the highest probability trades. And guys, that's what Nexgen teaches. Odds favorable, no termination conditions, recognizing areas of support, right? Looking for that best of the best. Going through that process of circling over and over. No divergence on a pullback to support inside of favorable large triggers on a 50-50 trade. Jose, where are you putting? No worries, D. Guys, I need the pep talks too. I really do. You guys make me a better trader. Do you know that? All the stuff that we talk about makes me better because everything's repetition. You guys have no idea how thankful I am for you guys. Jose, where was your entry? At the mid-band? Right at the mid-band? Yeah, it just didn't get you. Did you catch this one? Right at support? 50-50 from a good bottom, no divergence, strong triggers, pull back to the area. This one didn't fill you? You were looking for the mid-band, weren't you? Highest point of resistance, right? No support, no divergence. Guys, with all this momentum from a good bottom, tons of momentum, no divergence. I'm not anticipating a big slowdown, guys. Top of the window. Stop goes below the window. Rules don't change because you're scared. Ziba, so when you take your Apex trading and you have an account and you log in, there's this page right here that you need to keep up. Whoops. Flatten accounts. If something happens with NinjaTrader, flatten accounts. Boom. Pulls you out of everything. That's your ripcord safety if something happens. Pretty cool, right? That's the, oh shit, what just happened? Let me click that button. So they've worked that into it for you. That's your little safety net. Didn't get you guys. That one was beautiful though, right? Not necessarily, but it's electronically in there. So Ziba, I've been in trades and had Ninja 8 Trader crash, get them back up and come in and seen profit targets hit, seen stops hit. Because it's electronic, the orders are put into the system. Termination condition to the tick. You didn't get, your orders didn't stay in. So flat means that you're not in a trade. So if I'm in a trade and I flatten my position, I no longer have any contracts active. So for example, if I'm in a short position and I close, now I'm flat. I went from in a position to out of the position. But yeah, if 7 or 8 crashes, they're in. And you know what? Crashing when having a trade is a great exercise to evaluate how much you trust your trades. Because I've had them crash and I'm like, I don't care. Stops are in the right place. Targets are in the right place. I executed flawlessly. I'm not worried about it. And Jose, you're absolutely right on that one. All right, guys. Wow, it's 11:12. What happened? Let me ask real quick. Mark W., Billy Ray, Marshall, how are we feeling? Marshall, you have a little more experience, but Billy Ray and Mark W., let me share what day one feels like for the average person. Something just about like that, right? It's a lot of information coming at you, isn't it? So I want you to be okay. I want you to embrace the confusion. The idea is this classroom every morning is exactly the same for the first hour, Mark. And what we talk about in that first hour over and over and over again is the high probability trend trade. Those 3 simple rules. We'll go through the looks every morning, identifying momentum, identifying termination conditions, and then finding that best of the best entry. So this is a repetition for new users. I teach what is essentially a 101 class, Monday through Friday from 9 to 10. The average user will recognize odds favorable momentum within the first day because really it's pretty easy to recognize when the small and the large are separated, right? And then the next piece of the puzzle is being able to identify those termination conditions. So I want you guys to think about day trading is you're eating an elephant, right? And what's the only way to eat an elephant? You have to do it one bite at a time because if you don't, it becomes overwhelming. Back when I was a personal trainer, people used to ask me, hey, Mark, how do I lose 50 pounds? Well, you do it by 1 pound a week. Small, manageable goals. So what you're going to do and what we're going to do together, guys, is we're going to begin to identify odds favorable momentum. And then you're going to string that to termination conditions, knowing when the advantages go away. And ultimately, you're going to take those 2 and you're going to be able to identify when your rules are met, when you have those areas for entry inside of favorable large triggers. And the idea is that in the first 20 or 30 days, guys, your first 20 trading days, is that you can identify entries and that you can take pictures of those entries and share them in the room and get that feedback. And you can keep management very mechanical. And your confusion is only going to be amplified by Discord kicking me out. Let me jump back in right now. I know you guys can still hear me, but Discord will do this every now and then. My apologies. There we go, and I'm back. So if you keep it simple, go from entries, and then from entries, work on management, and then from management, the world is your oyster. It's a simple process, but it takes a little bit of work. It takes a little bit of time. And you put yourself in a position where when you embrace simplicity and you don't close out the workspace that everybody's trying to look at, it's achievable. The goal is to get you to a point to where you can identify $250 to $300 per contract of profit a day. And by using that high probability trend trade, by embracing that checklist, by coming in and asking for feedback, your ability to get there quickly is going to be realized. And then once again, and I like to say this at the bottom, if you let this be your path, if you embrace simplicity, if you ask a million questions, and I love a million questions, you're going to get fluent in your chart reading. You're going to understand where it's likely to continue, where it's likely to stop, where it's likely to go. And it creates a plan for you that is executable within that first 30 days, something that allows you to be profitable and winning consistently inside of 20 or 30 days. And then you're going to take the next couple months to build trust. And trust comes through repetition. Trust comes through taking a million pictures and seeing it happen over and over. Just so you guys don't have to extract and do all that. Mark, Billy Ray, Marshall, this is my spreadsheet. It's got coming up on 180 pictures of perfect entries. So Mark, a great way to come at this, if you do a little study this afternoon, is take this spreadsheet, right? Print it out, put it on your desktop. And all that is a high probability trend trade checklist. And use it for reference. And then just start going through trades. And saying to yourself, well, there's that odds favorable momentum. This doesn't even look like anything. There's no termination conditions. There's a pullback to an area of support right there inside of favorable large triggers. Man, this is a rules-based trade. That's what it looks like when it's the absolute best. Let me burn that into my mind and then go to the next one. That's odds favorable momentum. That's one of those 50-50 trades, but there's strong triggers and a small window for opportunity. And there's another one of those perfect entries because that's the focus. Does that make sense? Anybody can do this. I haven't met anybody that can't. Your trust is going to create an opportunity for you to be consistent. And then your consistency and execution is what's going to start to yield those results. So on that note, guys, I'm going to take 5 minutes. And when I come back, new users, last hour belongs to you. I want you to embrace it. So Billy Ray, you missed entries earlier, right? Do you want me to go back and talk about entries in this last hour? I'd be happy to. And we can go through and do some. We can do some bar by bar entries and get you comfortable. I'm happy to do that. I'll be back in about 4 or 5 minutes. When I come back, we're going to get into this last hour, guys. Don't be shy. Let's get you all the information that you need, get you on the right path. Learning how to study is one of the most important things because when you learn how to study, you can focus all of your efforts on convincing yourself that I'm full of crap. And if you spend that much time doing it, well, you'll be part of the family, right? Absolutely. So Mark, look 2 clicks above you. There's the spreadsheet. And then there's the checklist with the rules right there. And then I'll do even better. Let me give you a picture in the room that you can steal that's also the rules as well as the advantages that they provide. And from these right here, you can just download it, or you can left click and drag it over to your desktop and just drop it right on your computer from the Discord room. And then if you need any help with that, let me know. Or if it's easier for me to email it to you, give me your email. I'm happy to do it. Some people work better that direction. And guys, there's another one of those termination conditions, creating a reversal that bounces you out. So I'll be back in just a minute. And when I come back, let's answer every question you guys can think of. Back in a few, guys. All right, let's get into that last 30 minutes or so. D, some tips you looked up on becoming a good day trader. I love this. I do this too. Start small. Don't try to trade too much money too soon. Start with a small account. Gradually increase your risk as you gain experience. Or even more so, start with someone else's money, right? Prop firms. Practice. Amen. The more you practice, the better you'll become at day trading. There are many online trading simulators that you can use without risking any real money. Amen. Learn from your mistakes, guys. Everyone makes mistakes when they're first starting out. The important thing is to learn from your mistakes, not make them again. How do we recognize mistakes? How do we recognize patterns? How do we grow from them? Guys, you do it with your spreadsheet. Practice, right? Simulator. Is it just me, or when you Google how to get good at day trading, it's darn near this plan right here? Don't be afraid to ask for help. That's why you have the Novak brothers. Wow, you Googled it and it said Novak. I love that. And be patient, guys. It takes time. It does take time. D, thank you for sharing that because, man, that is true. All right, Marshall. Termination creates odds favorable, and you're waiting for a pullback. And you said you had to move your entrance. Let's see where you moved it. It came right to the mid-band, didn't it? You didn't have to move your entrance. Oh, let's go back. All right, Marshall, are you with me? You might be managing this trade. Oh, that's huge. Check it out. Let's use the checklist, right? I love the checklist. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? Absolutely. Add strength to it, right? Odds favorable momentum? Yep. Termination conditions. It's one of those 50-50s. Area for entry? And this is the part where, Marshall, we're going to refine just a little bit and give you a little more of an advantage. So the mid-band's right there, right? A tick apart. These triggers are coming down. That mid-band is going to level out a little bit as price comes up. This is just a little trick for you. I'm still going a tick or two below that mid-band because these are going to collide. And that was evident in your next picture. See how they end up smacking into one another inside? That's just a little trick of the trade there. That's something that you'll see with a little repetition. So what do we have? We have a 50-50 trade. And you already had two divergences. There's the Pineski, guys. Takes out the previous pivot right there. So this third divergence, Marshall, becomes problematic. This third divergence says, well, we may be done a little bit. We may push up a little bit higher. That becomes the management opportunity on a medium probability trade. But if you were in at the first spot just below the mid-band, that $100 was easy to make. That break even was easy to get to. Nice job. And it did go up from here. Great job. And check it out. So when we talk about those, it hits your stop. That's okay. Marshall, that was a great picture. Ah, and that was an awesome lesson. And then here's your lesson. When you take those medium probability trades, three divergences in the same general price range may terminate the trend, right? What a great way to manage on a medium probability trade. So, Marshall, I got to tell you, this is beautiful. I love what you did. Everything about it. Strong work. That's a weekend. So the entry is a couple ticks below the mid-band. And I see what you did there because that was inside of favorable large triggers. This is spot on. And then a little bit of experience lets you know that these two are going to collide. And that mid-band is going to end up right there at the large triggers. Don't be afraid to take that lower area it creates a little more manageable trade, a better opportunity to make some profits there. But I think you nailed it, man. Great job. And then Jose, and then I got you, Mark. And then do you see it, Marshall? There's Jose saying, hey, Marshall, we knew it was coming down. Quick profits out on that next pivot. Jose, beautiful trade. All right, you ready, Mark? Jose's helpful, I'm telling you. So on my 5-1 chart, if I right-click above price, my first option is sell limit 2. And what that means is that if the market comes up and hits this entry, and guys, this is not a rules-based entry, I'll be in a short position. If I right-click on the chart below price, my option is buy limit. And when I click buy limit, it means that if price reaches this area, I'm anticipating the market to go up. So we're going to take these limit orders and put them at those areas where the market's likely to continue, right there at those mid bands, fibs, 1-to-1s, inside of favorable large triggers when we have rules met. If you need to move a limit order, you can click that line and you can put it anywhere. And when you click a second time, that's when it moves. So if I right-click above price, let's say that I want to go short at this flat, lifeless large trigger, which is ridiculous. Right-click above price, it gives a sell limit order. Right-click below price, buy limit 2. And all that's saying is that if the price comes back down to 68.43, I want to be in a long position. Of course I don't. It is, the ATM strategy has to be set. So off to the side, click custom. And if you're taking that super mechanical, guys, your order quantity is 2. It's not working. Okay, try this. Up top, do you see this little thing that says Chart Trader, Mark? Click on it and turn on your Chart Trader. I bet that's what's going on there. I will, Shogun. And how you doing? Been a while. So Mark, right up the top is Chart Trader. Make sure that it's turned on, and then it'll give you that opportunity. So if I turn off my Chart Trader and I try to right click, it doesn't give me that. So right here, it looks like 2 lines coming off of a pole. It says Chart Trader. I'll click it and click on Chart Trader. And that's what's going to allow me to right click and get those limit orders. And guys, this is great lessons. This is what this class is designed for. You got it? Awesome. Shogun Ninja collapsed. Let me know when you come back up and we'll go through that ATM strategy. Stop loss is definitely important. And guys, remember that everything that I talk about, you can find, right? Check it out. ATM strategies. We are a bunch of men that hate instructions, aren't we? Shogun, let me know when you come back up and we'll take a look at it and we'll do one of those. Jose. Ah, yeah. 50-50. No divergence. Perfect entry. Money, 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 money. Every chart is red. Every chart is strong. Every chart agrees. Jose, absolute rock star trade, my friend. You know what? I'm going to steal it. You can't stop me. You're all the way in Canada. I'm going to go to my favorite looks. And I'm going to post a link. And I'm going to drop that address right into the address bar. And under text to display, I'm going to call it Jose's Perfect 50-50 entry and manage. Boom. And I'm going to come back and study it because dag nabbit, I want to be able to do what Jose does. Because Jose took the advantage of momentum from a termination condition on a 50-50 with no divergence in an area inside of favorable large triggers and took it all the way down to support. Jose, wasn't it nice that it was supported with an HVA right at the entry area? I love that. All right. And Mark, let's talk stops and targets. Just paying attention to the momentum in all charts. Nice. Let that lead the way, right? Odds favorable momentum. Gosh, what a great thing. All right, Mark W. Because of the way these rules work, we can go into everything with stops and targets, right? We know where the market should go. We know where the market shouldn't go. That's the beauty of what we do. So we're going to set up a strategy, these parameters, this ATM, guys. You've got to do this. Be protected. The order quantity is 2. So if we're doing that very methodical, mechanical, we have to add. We're going to have one target, whoops, in one spot, one target in the other spot. For the stop loss, 12 ticks gives you time to put it in that spot where the market shouldn't go. On crude oil, 10 ticks is 100. 20 ticks is $200. Guys, if you get into every trade with an ATM strategy in place, with stops and targets in place, you're just going to save it as a template. I'll call this one crude oil 2 lot. I'll hit save. And now I've got it. So now in my drop down, every time I have a crude oil 2 lot, if I get into the market all willy-nilly, my stop is predetermined at 12 ticks. My targets are at $100 and $200. If my target gets hit on the first contract, I have one contract remaining. If I need to move my stops or my targets, all I have to do is click a line and move. And guys, everything says down from a termination condition. To go long here is ridiculous. It fights the trend. It fights momentum. It's putting a lot of faith in one blue line. So if I need to exit that trade, I just hit close. And now I'm no longer in that position. So practice when you're brand new. Practice taking these trades. Practice moving your stops, moving your targets. And it's going to make life pretty easy for you when it's time to do it in the moment. You're looking for an entry? All right. How about this one, David? Let's reverse the arrow. I'm looking for a clear path. And that's probably, yeah. And guys, sometimes I'm going to take your charts. David, I know exactly what you're looking for, man. I know where your head's at. So when I do something like this, guys, I'm not knocking you. I'm helping the new users that don't understand exactly what they're looking for yet, right? All right, Marshall. Odds favorable momentum. No termination conditions. And again, Marshall, we want to be below that lowest point of resistance, not above, right? Because with all this momentum and a clear path, that market's likely to bounce off of this midband, isn't it? And the midband's going to keep moving. You say the triggers don't line up on both charts? From here and here? Marshall? It's because they're different charts. They're different time frames, right? It won't. It can't. No, that's cool. But that's one of those things that you don't know if you don't say it. Same reason these 1-to-1s aren't on the 5-1. These 1-to-1s are unique to the 13-2. This midband is unique to the 13-2. This Fibonacci line is unique to the 13-2. So that's why we take the advantages from the 13-2, the momentum, the clear path, and then the only coaching I can give on this one, because you're absolutely nailing it, is that this entry should be a tick or two below the midband rather than above, because if that market pulls up and hits the midband and continues from that lowest point of resistance, well, you're going to be sitting there watching the market go without you, even when you knew that you had every advantage to the downside. Does that make sense? And then check that out. Right to the area of resistance inside of favorable large triggers. Do you see it? No divergence on the pullback. Odds favorable momentum. Nice one to the downside there too. Rules based. Rules are designed to give advantages, right? So as we come down here, that was a perfect high probability. As we come through here, we've got a 50-50 trade with a couple divergences. 2 divergences on the low. Guys, remember the Pineski? Here's a pattern that'll help you guys identify entries. When these triggers are strong, 2 divergences on the 5-1 typically takes out the previous pivot. And if that previous pivot lines up with an area of resistance or support inside of those favorable large triggers, guys, this pivot stop out here typically creates a pivot stop out here. The key to this one is that the 13-2 is throwing advantages like it's going out of style. And all it does is it keeps you from getting in too low. When patterns, and that's all it is patterns let you know that that's likely to happen, not guaranteed to happen. So much so that I take these pictures and I put them in my chart. Pivot stop out here results in a pivot stop out here. I put them into my spreadsheet because this is stuff that happens all the time. A couple divergences here gives me that lower push in the window. Jose, 50-50. You got in at the pivot stop out and you were able to make money when everything suggested more down. That higher entry gives you lower risk and more profit. Nice job, Jose. And then Alan. Alan, I think I missed one of your charts earlier. Did I? If so, I apologize. And Ziba, oh, I got yours coming. Thank you, Ziba. I did miss yours. And then Alan, look at you. Pivot stop out. Boom, boom. And you put it 2 behind the pivot and it got you. And that's good management, right? That's following a management plan, and then these guys were just jerks and they got you. That happens. And with 2 divergences on a 50-50, I feel like that's a solid plan. Ziba, really? Termination, odds favorable momentum, no termination conditions, no divergence, pull back to the area inside of favorable large triggers, and you make money once again. Ziba, beautiful trading. Beautiful trading. Jose, beautiful trading. Alan, beautiful trading and great job sticking to your plan, even though it didn't work out for you that time. And then one thing that I'll do is if everything's really going to go down and I miss this one, sometimes there's a continuation opportunity. Excuse me, I'm so sorry. Oh my goodness. Your power went out. You had to call the trading desk, had to cancel the order. Oh no. Yeah, don't let electricians in your house. So guys, let's talk about a potential continuation. When everything says down, it's supported on every chart. Alan, let's say, for example, you're in right here, right? And you get dinged out and dag nabbit, whatever. It happens, right? Small triggers roll in the direction of the trade. Price pulls back right to those small triggers in an area. Guys, if the conditions are great, sometimes this little snapback at areas at the small triggers that have rolled creates an opportunity to get into a trade that didn't work out initially. And you'll see it. I've got the pictures. Tell him, Shogun. And here's the picture of it. Let me find it. And Alan, I'm telling you, this added a lot of life to my plan. It really did. And the key is that the 13.2, it still gives you all the answers that you need. Like this entry, I think we all would have been stopped out, right? Couple divergences, 3 divergences print, you're out. But everything still says up. Just that smaller, faster chart's giving us fits. When everything rolls, look at that snapback to the small triggers right at the area. And it's almost the same darn price. That's that great continuation look. And then the same thing here. If you're in at the trend trade, lower divergence, it pushes lower, you're out of this trade. Everything rolls and agrees. And this is very similar to what George did earlier. There's that snapback. But the key to this one, guys, and I'm telling you this because I messed it up 1,000 times before I finally started getting it right. The key to this look is that your 13.2 is still rules met. If things change on the 13.2, that continuation has less chance of being successful. Then it's just kind of you fighting. Shogun, did you get the ATM strategy? Was that you asking? Did you catch that lesson? Or do you need me to go over it? All set up? Awesome. Good stuff. And then guys, for those of you that are new, I want you to recognize all the participation that's going on in here. There's people that seemingly know a lot more than you if you're new, right? And they're posting all the time. They're posting their pictures, they're posting their questions, they're asking questions about other pictures. Guys, this is the key to success. Every time you ask me a question, it's like getting a private session. It's like getting those attaboys that people feed off of. It's getting coaching in the moment. It's getting all these opportunities to help get you where you want to be. And the only way I can help you is if you ask, guys. I don't read minds anymore. I used to, but then I turned 50 and it's all over. And guys, that's kind of what we do every day. In and out. No crystal ball. Guys, just because you're not new doesn't mean that you have to stop asking questions. Just because you're not new doesn't mean that I don't want to see your charts. I love seeing you experienced traders post in the room. I think that it not only helps the new users, helps the new users understand where they're headed. Because there's a lot of people, and we all started where we had to crawl before we walked, right? We all started where we were confused. We all started where it seemed like a different language. Ziba, I remember you telling me, oh my gosh, this is like reading Chinese, Mark, or something like that. I don't know, you speak what, 38 languages? So that may be one of your languages. But then a little bit of time, I know, I'm being silly. I do that sometimes. But a little bit of time, and look at you now. Look where you're at now. And you're what, 60 days in? 90 days in? Somewhere right around there. you're not too terribly far in, and it takes a little bit to get that confidence, to kind of get your mojo going, right? But once you get it going, you're unstoppable. And that's really why I appreciate you veteran users that are in here, taking a little time to show these new guys where they're headed, because you can do it. I'll help. I love teaching. I enjoy the class. And this class doesn't work if you guys don't give me something to do. So with that said, guys, go trade. Go follow rules. Go take pictures. Bring me pictures from your afternoon tomorrow morning. My email always works. Not everybody's comfortable with public speaking, right? Guys, if you need to send me a message, ask me a question, if you want me to review your trading plan, send it on over. That's cool. But here's the other side of that. If you don't post in my class, I'm not going to burn all my free time giving you private lessons on the side because you don't want to post. But if you're one of those people, you're like, man, Mark, I just wanted to save this one for outside of class. It's a little confusing. Or, hey, Mark, I really think I screwed this one up and I'm not 100% sure why. I wanted to talk to you about this rather than put it in class. I'm totally cool with that. My Skype works too, guys. With that said, I'm going to call it a day. Guys, if your rules are met, take the trade. If your rules aren't met, sit on your hands. Do something else. David, isn't that awesome? You were waiting for a clear path and it never gave it, and there's no entry. Possible long if. My favorite question. David, are you ready for the answer? Possible long if the rules are met. Luciano, which comments did you miss? On your chart? Did you post a chart? Because I've been making comments all day long. On this one right here? So termination creates odds favorable. Odds favorable gives a 50-50. 50-50. The pivot stop out here creates a pivot stop out here right at the midband inside of favorable large triggers. Beautiful entry, Luciano. And look at how strong the triggers are on the 5-1. Quick profits because it's 50-50. The market comes down, gives a third divergence. You made a little bit of a judgment call here, right? 3 divergences can end that trend, can push it right back up. You said, because of the termination, because of the odds favorable, because everything is down and these are still strong, you chose to stay in the trade despite the third divergence. This third divergence could have pushed it all the way up to 06, right? So maybe you're break even at this point. You got absolutely nothing to lose, and you've got resistance in a mid-band to protect you. You said, let's see if we can get a little bit more with all this momentum on every chart. You didn't see it till after? That would be the only thing that I could say about this one, Luciano, is 3 divergences in the same location, especially on a 50-50. The odds of this one doing what it did go down dramatically. But your entry is perfect, and those strong triggers really pave the way. Nice trade. And guys, that's it for me today. I hope you have a great afternoon, everybody. If you haven't written a plan, write out a simple plan. If you haven't used that checklist, do it. See what you can do. Guys, I have yet to have somebody follow that checklist for a week straight and not do better than 70% winners. Just throwing that out there. We are in it to make money, guys. I will see you tomorrow, and then we will have a blast. We're going to do it all over again. Take care, everybody. Joel, I'm in the Pacific Northwest. It is 49 and rainy. There is no tanning today.